2020 has been an extremely challenging year for businesses across the globe, and especially for India Inc., which has faced one of the strictest lockdowns across the world. As we transition into 2021, the industry's business outlook is improving. However, the mood continues to be cautious, with hopes largely pinned on a quick rollout of the COVID-19 vaccine. In a survey conducted by FICCI in association with Dhurva advisors earlier this month, 55% of the respondents said that they expect the economy to take a year to normalize. That's only a marginal improvement for the 62% figure from the survey's August edition. 59% of the respondents say weak demand is one of the key challenges that they continue to face. Managing costs and financial liquidity are the other major issues faced by those surveyed. However, 74% of the respondents expect the COVID-19 vaccine to have a significant impact on their businesses. In fact, 35% expect their growth to return to pre-COVID level within 6 months after the vaccine's rollout. Well, we're now joined by Uday Shankar, president of FICCI, and Dinesh Kanabar, the CEO of Dhurva Advisors, to take us through the findings of the survey and the message that it sends out. Gentlemen, thanks very much for joining us. We're pretty much wrapping up 2020, and the hope is that 2021 will be a much better year for India Inc. Uday, let me start by asking you, while the survey continues to point to an uptick between June and August, and now when the survey was last done in December, the mood, though, still is cautiously optimistic.
Thank you, Shireen. Thank you for having us, and thank you for this discussion. And as you said, the mood is cautiously optimistic, as it should be. You know, there is no case for being exuberant and very excited about it, because let's not forget that the COVID-19 is very much amongst us. We are very close to getting a vaccine in this country, but until a vaccine is delivered at scale, we still have a challenge, both a real public health challenge, but also a challenge of mood, sentiment, and confidence. And that is what I think this survey adequately captures, that people are getting optimistic on almost all parameters. The mood is better, people's behavior and the responses that they are getting to see from their individual businesses as a whole is getting better. But people are still very mindful that we are not out of COVID-19.
Yes, we're not out of the woods yet. But what about demand, Uday? What does the barometer indicate in terms of demand? And again, as I point out, that it has improved between the last two surveys that were done previously, the last one in August and, of course, this one in December. But what's the outlook for demand in 2021 that the survey picks up on?
I think there are 2 or 3 vital indicators that we should look at. First and foremost, capacity utilization is something that is a very important indicator. Because people, produce only what they are confident of being able to sell. And I think the indicators on capacity utilization have moved up very robustly. Then, we are seeing cautious optimism and good response even on sales. The November sales look pretty healthy. Even if you account for the festival uptick, it was still a good trend. Then exports. Again, they remain, they need to catch up a lot of ground, but the trend is very healthy. So all in all, I think there is demand, and this demand is only going to get better as soon as there's a vaccine that's being administered to the population. I think you will see somewhat of an accelerated demand also amongst us.
Okay, so a lot linked to the rollout of the vaccine. But Mr. Kanabar, while the government has not made the vaccine mandatory, at least not at this point in time, given what you're picking up through the survey, does it look like India Inc. is going to make it mandatory as far as the employment contract is concerned?
You're very right. As you rightly said, 74% of those surveyed really are positive about the vaccine. And obviously, vaccine can be effective only if it is administered. And as Uday rightly used the word, administered to scale. A second point, again, which is quite standing out in the whole survey, is that 69% of the people seem to be very gung-ho about manufacturing moving from China to India. So that again is a very high number. It's quite a resounding thing to say that people do believe. Now, to your point on whether India Inc. will make it mandatory, it remains to be, I think rather than making it mandatory, employers like us are going to go back and say, every employee will be provided vaccine free, whatever be the cost. as it is, the cost will be subsidized, but you make it free, and therefore make an incentive to the employees to take it rather than make it mandatory, because clearly there is a segment of public out there which believes that no vaccine. But more important, as I see, and again supplementing what Uday mentioned earlier, there is a positive message out there somewhere coming. It may not be a huge shift, and as you rightly said, it's cautiously optimistic. But if this is what the CXOs are feeling, then clearly steps are being taken. And just look at from a broader perspective, Shireen. You look at the IPOs which have happened. How have they got subscribed? How many times have they got subscribed? At what premium are they trading? And when IPOs start to happen and the capital market starts to move forward, people start reorganizing themselves. So maybe going a little bit beyond the survey and sharing my own experience of what we see as professional advisors, we see huge amount of restructuring happening. We see people really moving down the path of IPOs, capital raising, debt raising, at a scale which I must say is almost pre-COVID or even maybe higher than that, maybe because of that 5-6 month window when nothing happened.
Yes, and that is certainly something that we've seen, capital raising, whether it is repairing balance sheets, deleveraging, that's all been part of what we've seen happen in 2020. But, on the aspect that you brought up, this India advantage versus China, Uday, the survey clearly points out that Indian companies believe that this is going to result in a massive shift out of China to India. But how do you read this? I mean, in terms of, government measures that have already been announced through the PLI, etc., and India Inc.'s own preparedness to be able to capitalize on this so-called opportunity?
I think that's a very vital indicator, Shireen. The first thing is for the leaders of the business to believe that there is an opportunity. Because there may be the objective conditions, government may create a set of incentives, but if those who are driving their businesses, if they have to make an investment, make a strategic shift, if they don't believe in the value of that, nothing would move. And I think I'm personally very encouraged by the fact that such an overwhelming number of CXOs believe that there is a real opportunity, there is going to be a global shift in the supply chain, and India has an opportunity to participate very strongly. That means that people are willing to see the opportunity for their individual companies and their businesses as to how they can participate and carve out value for themselves. Secondly, the measures that the government has taken, you mentioned PLI, that's certainly a very, very significant measure. I think it needs to get far more ambitious and far more radical. But every indication that we are getting is that government is very committed towards taking every measure in order to make that leap. But if we do the right things, then we do have an opportunity to create massive value over there. And I'm very encouraged by the fact that so many people believe that there is an opportunity there.
Yes, that clearly seems to be one of the biggest highlights that the survey is throwing up. But Mr. Kanabar, let me address the other issue, and that has to do with the jobs market. 2020 has been a difficult year. We saw companies retrench. We saw salary reductions. We've also then seen a reversal of those cuts by some companies. But what's the outlook from a jobs market point of view for 2021 that the survey picks up on?
Let me just for a minute go back and supplement the point which Uday made with regard to production happening in India, moving from China, because that has some bearing on job markets and whatever else we are talking about. So probably India is still not used to the type of scale that we see in China. And when that scale happens, it's going to create its own job. So that's the first point I would like to make. And India needs to reorient itself. Today what we regard as big is probably too small compared to what the size and the scale that we see in the context of China. And that's the opportunity coming to us. If you leave a couple of negative things, Wistron and all of those aside, really most of the global players want to come and set up in India, primarily for one other reason, leaving trade war and everything aside. And I have had chats with several contract manufacturers to come back and say, we cannot put all our eggs in one basket, that is China. We need to be diversifying. And there is a huge amount of shift out there. So if the government starts reorienting and making policies which allow that manufacturing shift to happen, at a scale that one has seen. I've seen factories in China where at a single location you employ 500,000 people. That's unheard of here. And if that's a scale that we can gradually move, it will take a lot of time. But if we start moving in that direction, then clearly job creation will happen. On the point specifically which you mentioned, and I can say this again about our own organization, what we see in the consulting business, what we see elsewhere of our clients. In March, April, May, the mood was, oh, there is doom and gloom. And therefore, there were job cuts, there were salary cuts, etc., etc. Gradually, we have seen people pay past bonuses. Gradually, people have restored some of the increments. And that's saying a lot. In a period of 6 months, we have sort of moved up and sort of come back to the growth curve. And when people start giving increments, people start looking at promotions. That's when people are seeing a lot of optimism. Otherwise, it won't be happening. So while the survey speaks about weak demand and cost as being two sort of factors which are weighing in people's mind, if you see the outlook for the next 3 months, 6 months, whatever else, that seems to be hugely positive.
Yeah. Yes, it certainly is indicating hope is in the air. Uday, I'll give you the final say. All eyes now on Finance Minister Nirmala Sitharaman. You were part of the pre-budget consultation meetings that she had with industry. Is India Inc. really hoping for a big bang budget? Because, the expectation is always there. And this time, perhaps bolstered by the fact that the finance minister herself has promised a budget like never seen before.
So you said that, Shireen, the finance minister herself has held out the hope that she is aware of what's expected of the budget, and she's pretty much prepared to walk the talk. So it's all there. I think we have a huge opportunity. We had a huge crisis that we are coming out of, and we have a huge opportunity going forward. I think this budget will be a big signal as to how boldly we are willing to walk in that direction. I'm one of those who believe that budget is a very important signal, very important document, but it's not the only one. We need to walk down this road consistently and for some time. But I think the budget is something that we'll all be looking forward to. And the finance minister has certainly raised expectations by promising that she is aware of it, aware of the requirements, and she's willing to do the right things.
Yes, she certainly has raised expectations. Mr. Kanabar, the final word to you then on budget expectations. Direct tax cuts, and the survey points to a resounding majority expecting massive cuts.
Yeah, and sometimes I wonder how is the finance minister going to balance the budget, and what sort of a fiscal deficit are we going to look at? Clearly, oil continues to be in our favor and whatever else, but the revenues that we are raising from oil can go up to what limit, and where do we stop sort of? But I agree with you. The finance minister has raised expectations, Shireen, and I do hope those expectations don't get belied. I'm a very positive person, and I'm very sure that things will happen. Remember that if we speak about a weak demand, one of the ways to give impetus to the demand is indirect taxes. And that's not what's going to happen in the finance bill. That's something that the GST committee is going to look at. So the only thing which can happen there is really, are there any more boost that we are going to give to manufacturing sector? Are we really going to remove some of those issues which people have represented on why restructuring is becoming difficult because of interpretation of tax laws and things like that? Some of those are very, they may sound technical, but they're really real out there.
Yes, they are really real, and in light of the fact that on the issue of Vodafone, the government has decided to now go in for an appeal since we're talking about taxes, and that was something that you were hoping, Mr. Kanabar, would not happen. It has happened, and I would imagine it'll happen in the matter of Kane as well. Perhaps there would be some messaging that investors will look forward to from the Finance Minister. Uday Shankar, Dinesh Kanabar, always a pleasure. Many thanks for joining us here on CNBC TV 18 to take us through the highlights of the FICCI and Dhurva Advisors survey. Appreciate your time. Well, COVID and the lockdown have led to job losses and salary cuts across businesses. Has the situation improved with the drop in COVID cases, easing of restrictions, government stimulus? All of that, of course, is something that we've just discussed here. And the outlook certainly is positive. We will take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment. You're watching Restarting India. It's time now for the 2020 Deal Roundup. According to data compiled by Grant Thornton Bharat in its annual deal tracker, despite being one of the worst hit countries, India saw a sharp resurgence in deal activity in the third quarter. As a result, total deal value rose by 28% to $76.8 billion over 2019. Even deal volume saw a significant uptick at 1,299. In sector-specific action, the telecom industry accounted for 28% of the total M&A deal value for 2020, followed by 14% in the energy sector. Facebook and Google's investments in Jio were the two biggest deals in the M&A space, followed by the Reliance Retail Future Group deal. In the private equity space, also telecom industry accounted for 25% of the total deal value. Retail and consumer segments share stood at 16%. Well, joining me now is Prashant Mehra, partner at Grant Thornton Bharat. Prashant, many thanks for joining us here on CNBC TV 18. Those are some of the highlights of 2020, but given where we see global outlook as well as the outlook for the domestic economy, what's the sense that you get about 2021? Do you believe it's going to be a big year or a continued big year as far as private equity investments into India are concerned?
Hi, Shireen. Actually, a very pertinent question, Shireen. You know, the year started, 2020 started with being a very difficult year, but I'm glad that we've ended that year as a different year than what we've had in the past. Deal activity, as you summarized, has been phenomenal. We've had 33% growth in corporate M&A, and we've got 25% growth in private equity. In terms of even QIPs, it's been the best year in the last decade or so. I think a resilient and focused response from economic policy makers has not only led to a sharp resurgence, but has also set the stage for balanced growth in the country, and perhaps which will attract even more investment. The pandemic has put emphasis on businesses with strong fundamentals, which is, will now focus on both the top line and the bottom line. I believe 2021 will witness a healthy balance between infrastructure and when I say infrastructure, I think we have a new definition on that. It's not just brick and mortar, but it's technology as well. And on the other end, we'll see, focus on consumer sector as well, both, with a flavor of technology. Probably, some new terms will start gaining emphasis, such as unit economics, profitability, business model, not just revenue model, digitization, problem solving, real world solutions, the Bharat story, not the India story, rational valuations and smart cities. I mean, in a nutshell, I actually look forward to a much healthier and a successful 2021.
You know, it's amazing how a crisis is getting people to focus on things that matter, things like unit economics, profitability, and business models. But I guess that's the nature of the game. But Prashant, you talked about some of the sectors that you believe will draw in investments in 2021. Infrastructure, not brick and mortar, so not the roads and highways as much as the digital infrastructure that you speak of. We're awaiting more clarity on the 5G rollout plans the government has in store. Where do you believe we're going to see the deals getting done? And do you believe that these are largely going to be buyouts that we're likely to see, majority being taken? Is that the expectation?
I think just Shireen, firstly, technology is a very wide sector now. I would call telecom also technology. There's less of cables and more of information highways and clouds there. So yes, while that physical infrastructure is also important, but I think the new definition of an infrastructure is about the digital infrastructure. The government's doing its bit. We believe there is a legislation which is currently in draft mode, which will allow technology companies in India to list overseas directly. That's a welcome move. In terms of the investments which are coming in, I think it will probably be a mix of both foreign money coming into India and yes, a lot to do with consolidation as well. There are some very successful platforms which are sitting on lots of cash now. So there will be consolidation for sure. But yes, it probably will be at rational valuations.
Any new sectors that you believe will be in vogue in 2021? I mean, telecom, as you pointed out, has been the big story. Retail has been the big story of 2020. EdTech, FinTech, those continue to be themes that have gathered the momentum through 2020. Anything that's off radar that's likely to be in the spotlight in 2021?
Absolutely. I think we've seen some flavor of that in 2020, and I think we'll see more of that in 2021. From a B2B perspective, I believe, anything to do with HR tech will be the flavor of the new year. We've realized that geography is now history. Thus, we need to do more in terms of technology and people. So anything to do with HR tech will be one. And I think on the other side, we've seen a lot of investments going into online gaming. So anything around, edtech, as you rightly mentioned, but, something more on the entertainment side as well. I mean, we never know, some of the OTT channels could be attracting even more investments. That's really the entertainment of today.
Yes, HR tech, online gaming, those can be some of the additional themes to watch out for. Online gaming, of course, already saw a fair amount of action in 2020. Prashant, I'll end by asking you talked about how this was perhaps the best year for QIPs in a decade, and we've seen India Inc. on a capital raising spree. Do you believe that that's likely to continue? What does the IPO pipeline look like as well?
I think Shireen, pipeline is looking quite healthy, and it's got even more accelerated because of the new flavor, which is technology, as well as the concentration on top line as well as bottom line. I see 2021, perhaps just after the budget is announced, we will probably see a lineup of investments coming into the market. And a lot of IPO activity, and perhaps towards the later part of the year, maybe some international IPOs as well, where Indian companies would debut on the overseas stock exchanges.
Yes, those foreign listings that have been much talked about, but we're still awaiting detailed guidelines from the government on being able to go through with that. Prashant Mehra, always a pleasure. Appreciate you joining us here on Rewind 2020, the special edition of Restarting India. Those were the key insights from the 17th annual edition of the Grant Thornton Bharat Deal Tracker that will be released next month. That's all the time we have on this special edition. The news will continue here on CNBC TV 18. From all of us here, goodbye. Thanks for watching.